Welcome back, my audience. Now, today, my awesome people, I am honored to be here with Christian Magoon. He is the CEO and founder of Amplify ETFs. He is also a legend in the ETF space, and I am very, very looking forward to speaking with him with all the wisdom and knowledge that he has, not only about ETFs, but also revolutionizing the future of ETFs with crypto ETFs, AI ETFs. We're going into the future, my friends, and this is the time and now to start looking at these sectors before you kind of get left behind. For those of you that haven't invested in crypto yet, I know many of you were investing last year and some of you were staying away from it, but guess what? Look where crypto is now. We're hitting all-time highs pretty much on a daily basis. So let's talk more about AI. Let's talk more about the infrastructure of the data centers, and you will definitely be more prepared than I was yesterday. So, Christian, thank you for being here with me today. How are you doing?
Hey, it's great to see you, Jacob, and congratulations on the success of your channel. I love watching the videos. It's an unbelievable selection, and most of all, I love your energy and enthusiasm. So happy to spend some time with you today.
I really appreciate that. That's what I try to do through my channel to give financial conversations in a more positive, upbeat type of environment. I've seen many financial videos and they're very monotone and kind of just, the typical professor style of spreading information, but I like to make mine a little bit more fun. So Christian, let's just get right into it. So tell us about yourself. What first inspired you to get into the world of ETFs and found Amplify ETFs? And can you provide maybe a history or overview of it?
Sure. So I was always kind of a student of the financial markets. I remember, I think I got my first stock picking book when I was 7 years old by Peter Lynch. I was always very interested in it. I had family that was in the business, who are financial advisors serving businesses and individuals. And when I kind of became of age, I decided I wanted to get into the business of really producing the products that financial advisors, institutions, and individuals use. So I began working at a variety of different firms and eventually founded my own firm almost 10 years ago, Amplify ETF. So I'm CEO and founder of Amplify ETFs. We're based in Chicago, Illinois, and we have about 30 ETFs that really kind of fit into two categories: high income ETFs, everything from treasuries to Bitcoin covered calls to high quality stock dividend products, to the other side, which is our growth or disruptive growth suite. And that ranges from anything from cybersecurity to blockchain and crypto to battery metals, even silver miners for those of our fans that are up in Canada. So we have a very diverse group of products in about $13 billion, nearly $13 billion in assets under management in the US, with a little bit in Asia as well. So happy to talk to you about a variety of different topics today. And as you said, there's a lot going on in today's marketplace and a lot of choices for investors. And we have a lot of different insights we'd love to share on so many of these headlines.
And that is perfectly said because your wisdom, your expertise is something that I and my audience are highly looking forward to hearing from today. And so currently, Amplify ETFs has three breakthrough ETFs. You have the Bitcoin Max Income Covered Call ETF, ticker symbol BAGY, the Bitcoin 2% Monthly Option Income ETF, ticker symbol BITY, and the Transformational Data Sharing ETF, ticker symbol BLOK. Can you tell us more about these three pretty much groundbreaking ETFs and maybe some of the holdings that are truly one of a kind?
Yeah. So, hey, I heard you talk about getting into crypto about 2021. If we go a little bit before that, in 2018, we launched the first blockchain crypto ETF in the US. That's the largest actively managed fund with about $1.2 billion in it. And the ticker is BLOK, BLOK. We couldn't actually use the name blockchain due to regulatory issues in the name of the fund. So that's why it's called the Transformational Data Sharing ETF, Jacob. But luckily, we had the ticker BLOK. And BLOK has been really a revolutionary product because it allows investors to own not only blockchain oriented stocks, which are in the news lately with the Genius Act and stable coins and what's that's going to do to the payment system. But also, we own the crypto companies, whether it's a Canadian company like Galaxy Digital, to some other mining companies here in the US, to even being one of the early investors in MicroStrategy and Metaplanet. So our BLOK ETF has been out since 2018. Over the last 5 years, it's averaged 28% a year in terms of return. It's gained about 40% year to date, and it's an actively managed product where we own somewhere between 40 and 50 positions, mostly equities, but also some Bitcoin ETPs. In fact, for a Canadian audience, before they were spot Bitcoin ETFs here in the US, we actually owned some of the Canadian spot Bitcoin ETFs from one of the sponsors up there, Purpose, and amongst some others. So this has been a revolutionary product for us, but it's more capital appreciation oriented. BLOK is. So about maybe 2 months ago, we launched our first Bitcoin products that actually have an option strategy attached to them. And you've talked about some of these products before. We thought we could do something a little bit different, and that's offer investors Bitcoin price exposure, but also some income as well. So our first product, BITY, BITY, seeks to own Bitcoin exposure and then write options, covered calls on that Bitcoin exposure to create 2% monthly income. And that's option income. So annualized yield of about 24%. What that allows you to do with that 24% yield is still have about half the upside of Bitcoin price appreciation. So it's kind of like a balanced portfolio between growth and income. So we know not everybody, though, wants just 24% yield. There's certainly a lot of people who say, I want a lot more yield. And that's where our BAGY comes in. BAGY writes covered calls on its Bitcoin exposure every week, just like BITY, but it writes calls on the entire portfolio. Does so about 5% out of the money, meaning every single week you can actually participate in the first 5% upside of Bitcoin. But in sacrifice of not being able to participate any further than a 5% gain in a week, you're going to get income that we estimate is between 30 to 60% a year. Why do we estimate that range? Well, that depends on Bitcoin's volatility. Because we're covering all the portfolio at 5% out of the money, we have to depend on what Bitcoin's volatility is to know what the income will look like. And again, looking backwards, we've seen about 30 to 60% yield. So that product currently yields just over, I think, 32% is our latest yield number. So both of those products, they pay monthly income to investors and allow for different measures of upside in terms of Bitcoin price appreciation. Now, I will note, because this is something that you have to understand on the covered call side for any like single stock covered call or Bitcoin covered call, is you do have 100% of the downside of that asset class. So you still have 100% of the downside of Bitcoin with both of those funds, although that will be somewhat offset by the income you would expect to generate from those options. So just want to be fair and balanced when we explain those products.
And you know what? Thank you for explaining that, because covered call ETFs have been very, very popular, I would say, in the past 5 to 10 years. Before that, the traditional form of investing was 30% bonds, 20% treasuries, and kind of dividing it up that way. But these days, I think ETFs are pretty much uh, getting more popular compared to single stocks or those government bonds. Can you just tell us a little bit more about the covered call options? Why is it a better choice rather than, I know the fixed income is there, but why do you think it's a better choice? And why do you think it's getting more popular?
Well, when we look at our covered call products, we really don't necessarily focus on income. We actually focus on total return. So if you think about most investments that are income oriented, some of their return comes from income, whether that's dividends or option income. Some of it comes from price appreciation. And we really believe that when you're selecting a portfolio, you want to have a decent representation of both of them. And as you know, sometimes when income investors are going out and looking at dividend or option income ETFs, they're only looking at the income side and forgetting about the capital appreciation side. And you might buy an ETF, for example, that has a very high yield, And then at the end of the year, you look at your total return, and your total return on the ETF was less than the yield. That doesn't really make sense. We think that the yield and the price appreciation need to both contribute to the total return, and that over time, investors will be better served from that. So when you look at BITY, we have about a 24% annualized target income, which gives you about a 50% upside still that could happen in price appreciation for Bitcoin. Very kind of balanced way of investing. When you look at BAGY, you don't have as much upside because you have that 30 to 60% income range. However, on every single week, you could go up as much as 5% should Bitcoin go up 5% in that given week. So we think that that's a key combination and differentiator of our ETFs. We also, on our ETFs, are only writing calls on a weekly basis. And by doing that and doing it more frequently than just once a month, it allows us to take advantage of some of the up and downside of the marketplace when it comes to Bitcoin. That should be able to protect us a little bit more on the downside and allow us to participate more on the upside. Imagine if you have a monthly call writing ETF, and 2 days in, you hit that 5% out of the money, and you have to wait another 28 days to write another option. Well, that's not the case because we're writing options weekly. Thus, we can reset and continue to roll those options every week. The other thing I would just say is what's unique about our products is we're about 50% less expensive than most of the other products in the marketplace. Most of the other products are pricing about 90 basis points or almost 1%. We're priced at 65 basis points. Why were we trying to really, underprice people? No, we just believe that looking at our other covered call products, that is kind of the similar pricing strategy that we should maintain. Most of our investors are used to us delivering covered call ETFs, maybe not in Bitcoin form, but we didn't see a need to price up the Bitcoin or the crypto ETFs to the 90 basis point range, instead stuck at 65 basis points, which ultimately hopefully helps yield in total returns for shareholders. So I think we've got something pretty unique and interesting with BITY and BAGY. And Jacob, we just filed for our Ethereum versions as well. So look for those in about 75 days.
I am so ecstatic to hear that your Ethereum is coming out as well. And also, you made a very good point that unfortunately, a lot of ETFs these days, a lot of them do focus on the yield, but the appreciation is, maybe making you miss out on some returns. But with your, I guess, philosophy, you're looking at the overall return, which is not only looking at the income, but also the appreciation as well. So I think that's a very, very, as you said, it is a unique product, and I absolutely love that. I have ETFs that the yield is amazing, but the appreciation is still slipping. So after
Yes.
looking at many of the holdings in those three ETFs, how do you balance direct exposure to crypto and crypto infrastructure? So I know some of those ETFs are not directly investing in Bitcoin. As you said, you're investing in I guess, the infrastructure of the crypto, of the blockchain. How do you balance that?
Yeah, so our BAGY and BITY ETFs, they're either going to have their Bitcoin exposure synthetically through options, or they're going to own maybe like the IBIT ETF because there's easy option trades to place on IBIT. In terms of BLOK, it's really a variety of different types of exposure. There's actually 9 different categories of exposure inside BLOK. So that ranges from crypto miners and crypto exchange companies, which tend to have a very high correlation and a leverage kind of price appreciation or depreciation relative to Bitcoin and crypto. We have digital payment companies. We have a sleeve of blockchain companies that are working on public and private blockchains. So those would be some of the payment blockchains that are out there. We just saw here in the U.S., a company like formerly Square, now BLOK, just entered the S&P 500, and that's a crypto payment facilitator. We also have exposure to venture investments. We classify a company like Galaxy Digital as a group that's doing investment banking activities and taking stakes in different crypto companies. We have a direct, or I would call indirect crypto exposure, meaning we directly own Bitcoin ETPs in BLOK. So these are all kind of managed by our portfolio management team, and you'll see shifts, Jacob, depending on kind of the mood of the markets. if we're more in a bull market for crypto, they're going to lean into the more crypto sensitive categories that I mentioned. If there's starting to become a drawback, they'll lean more into the less sensitive crypto categories, which are really more the blockchain companies, the payment companies, if you will, and the infrastructure companies. So there's the portfolio is really constantly changing based off market tailwinds. Also, I just note, they take a risk adjusted approach to investing in blockchain and cryptocurrency companies. So you'll see position limits. Generally they're trimming positions. They get to be more than 5.5% of the fund's weighting. So that's something you can monitor really on a daily basis. We disclose all of our portfolio holdings, which refresh every day based off trading activity. And then once a month, we post our blockchain monthly, which talks about the stocks that we trimmed or added to, what were some of the biggest contributors to performance and detractors, and then also talk a little bit about the space. So we're very transparent in our BLOK ETF, and I think that's why it's still the largest crypto blockchain ETF in the US now, with a peer group of 20 different ETFs there. So we've been able to maintain that lead and continue to grow the fund.
That was perfectly said. As you said, right, when there's a bull run, you're going to focus, or you're going to manage it more into a sensitive crypto sectors compared to if it's a bear run and things are slipping a little bit. You go maybe into the more the payment processing, and I think that's a good way of doing it because just like the gold rush, you're not going to make as much money finding the gold than you would selling the shovels or selling the pipelines. And so by looking at everything around it, I think you guys are definitely in a well positioned for the future of crypto because I would have done the same, especially with data centers and the use of energy and all that fun stuff. So which sectors do you believe are ripe enough for blockchain disruption in the next 5 years? I know a lot of people are saying, AI, quantum chips, and all of this stuff, but what are your thoughts?
Yeah, so blockchain is probably, I think, poised to take over payments in a big way. And in the U.S., we've had this Genius Act just be signed into law that really regulates and creates the framework for stable coins here in the U.S. And you think of stable coin, those are just really another way for people, institutions, governments, corporations to use digital payments but via the blockchain. So there can be instantaneous settlement. So that market is 1.8 quadrillion. It's massive. And the US now wants to be a leader in there. So, now that we have this federal government framework on stable coins, these stable coins will be in the US backed by the US dollar and treasuries. So they're very good for the US dollar and treasuries, which is why the US government proceeded, I think, in this direction. But for, investors like us that are a little bit more crypto native, it's very good for the rails that stable coins are built on. So that's Ethereum, Solana, and other L2s. So I think, the payment industry is going to be massively disrupted. Everything from money transfers to SWIFT transfers to transferring money overseas, potentially paying credit card bills, mortgages. I think it's all going digital. That's that huge market, that quadrillion number that I mentioned. And that, I think, is really the next big kind of powering of the blockchain. There's
And
other things that will happen because of that. Once you get finance digitized or payments digitized, we probably might feel more secure voting or putting our medical records on there or, inventory management for governments, et cetera. There's just so many applications. We just haven't had that killer like chat GPT moment of that AI had for blockchain yet. And I really think this stable coin could be it. So I look for a massive kind of bull market in these Ethereum and Solana and L2s, as well as kind of these companies that are creating the blockchains, which stablecoins will use, be that public blockchains or private blockchains. So before, in our BLOK ETF, the big performance driver in terms of capital appreciation has primarily been crypto companies, the micro strategies. When we originally bought it at $14 a share a long time ago, Meta
Wow.
Planet, etc. But I think now we're going to start seeing these payment companies and the blockchain companies start to pick up more weight and not be as defensive, if you will, and instead really start to be offensive. So pretty excited to see kind of how that evolves given the legislation that's recently passed.
And do you think CBDCs, the central bank digital currency, is going to be the same or working together with these stable coins, or are these two separate forms of payment processing?
Yeah, so I'm going to walk a little bit on the diving board or walk the plank here and say, here in the U.S., we've actually are waiting signature of a bill to ban central bank digital currencies. There's been really a bipartisan move to move away from the CBDCs because of the element of control and social engineering and lack of privacy that can be that would be given up to government. So unlike China, that seems to really enjoy, that system and connecting it with AI and cameras and virtually finding people. I know here in the U.S., it looks pretty certain that there'll be legislation signed within the next couple of weeks that will officially ban a central bank digital currency here. Now, with that being said, there will be, stable coins that are backed by U.S. treasuries and U.S. dollars, and that will be legal tender. In fact, it now technically is based off the Genius Act. So we will have that. We're just going to prevent, at least here in the U.S., the monitoring and the invasion of privacy. Maybe that's that U.S. kind of feel about keeping government out of our private affairs. But it looks very strongly like we will be banning CBDCs here in the U.S. So I think that's a kind of a win for those who love freedom and smaller government. And I think a lot of people who tend to like crypto as well.
Yeah, I remember the past couple of years, CBDCs were the big talk. People were afraid that their assets and their money was going to be tracked. The government had so much of their hands in your own finances because it was digital, so they can just, boop, zero, or, there's a lot of conspiracies, there's a lot of things happening, but I'm actually happy that CBDCs are, not going to be a thing because me personally, I wouldn't want that government overreach. So when we're looking at the next wave of crypto adoption, 2 years ago when BlackRock came out with their spot Bitcoin ETF, that was kind of the first, okay, maybe institutions are ready for that next step. But other than that spot Bitcoin ETF, what do you think could be the next factor that can push crypto even further adopting and also in price as well?
Yeah, so I think one move that's happening right now is certainly the treasury company strategy, right? So Morning's MicroStrategy or Strategy now, pioneered it. And, I was fortunate enough to have a dinner with Michael Saylor about 2 years ago at one of the ETF conferences and really heard him talk about this strategy. And boy, is he passionate, not only in front of the camera, but behind the scenes. And it was clear that this was a kind of a revolutionary idea. And now I think he's really proved it out. So we're now seeing, these treasury companies, mostly focused on Bitcoin, start to launch in all these different countries, like so MetaPlanet, right, in Japan, and the Smarter Web company in the UK, and I know Canada has one or two now, and I just saw Australia has one, Korea, etc. So these companies that are essentially going out and raising capital via sale of their stock on the open market or creating preferreds or convertible debt. And again, using all those proceeds to buy more Bitcoin is kind of an appealing thing for many investors because many people in different markets don't have maybe as unique tax treatment for Bitcoin. It's punitive than owning an actual company. So there's some tax advantages in these treasury companies, but also the returns of these treasury companies have been generally exceeding Bitcoin. They're definitely leveraged and have more volatility. But as we've seen, for example, MicroStrategy versus Bitcoin and almost every asset, the alpha has been real. So I think treasury companies are going to continue to push demand for Bitcoin upwards quite a bit, especially in Bitcoin. We're now seeing Ethereum treasury companies launch. I know Tom Lee just launched one, and there's, I think, several other. SBET is another company that recently launched, and they're seeing some very strong initial interest. So I think this whole treasury company trend is here to stay. I just don't know, how many can exist around the world before maybe some of the multiple to net asset value premium they have is less. And what is that multiple to net asset value? It simply means if they own $1 billion of Bitcoin, most of these companies are trading for 3 to sometimes 7 times that amount of Bitcoin they have on their balance sheet. So, if they're $1 billion of Bitcoin, their market cap might actually be $3 to $7 billion. And that is how they're kind of getting this leverage return. And then they're turning around, selling that stock off at a $7 billion or $5 billion valuation, which investors are buying. And then they go out and buy more Bitcoin. So it's kind of this virtuous circle. We'll see how long that lasts. I think, beyond just these corporations, the two areas that we're closely invested in terms of our business is financial advisors and wealth management platforms here in the US. They're just in the early stages of allowing advisors and their clients to buy crypto ETFs. Many of them don't allow advisors to buy these at all. Some are allowing advisors to buy it if a client requests it. So maybe that's non-solicited. And then another group is allowing advisors to buy it, but only for clients that have a certain amount of assets under management, or only a certain amount of the account, like 5%. So maybe you have to have $4 million of assets under management, and it has to be less than 5% of the account. The very last little tier is advisors who can buy as much as they want for any client. So I think, we're starting to see those tiers start to collapse down more. We're seeing kind of advisors having more and more discretion to buy crypto for clients. But I would say, we are on every major wealth platform. We work with every broker dealer out there in terms of being an approved ETF sponsor. I would say there's probably 20% of advisors who have full freedom right now, and the rest are caught up from not being able to do it, or maybe only on a limited basis for certain types of clients. So I see that being a huge growth engine over the next 18 to 24 months. And then finally, I'll just say here in the US, I know these Bitcoin treasury bills in states are really starting to heat up. And I think we have 3 or 4 states now that have passed legislation that allows the pension plans of individual states here in the US to now invest a portion of their assets in Bitcoin. And of course, the federal government is undergoing a study right now to formulate a plan for recommendation to actually hold Bitcoin as a strategic reserve asset. So, stepping back here, my experience in investing in terms of themes and sectors is if you can get the 3 big parties to line up, you've got a big deal. And the 3 big parties are retail investors, corporations, and government. And I just painted a case where all 3 seem to be net buyers and definitely increasing their ownership of Bitcoin, of probably of Ethereum and some of the other larger cryptos going forward. So I see a real bright future over the next 2 years for this marketplace.
Christian, I have never heard anyone say it that way. That is amazing, amazing, amazing. So we are now going into the treasuries, the governments that are starting to get involved in crypto. It's not just institutions and retail anymore because they're kind of already in, but now it's the pensions, the retirement plans, I know the White House was trying to create a crypto treasury just about a couple months ago. So I think that is such I would say, useful treasury because, as you can see, I believe it was a South American country. I believe El Salvador. Sorry, El
Yeah.
Salvador. They are out of debt. They don't even owe the IMF anything anymore. So they've pretty much climbed out of debt because of their Bitcoin treasury and having everybody pretty much function on Bitcoin. So Absolutely. Thank you for that, Christian. So just taking a little pivot here, let's take a look at thematic ETFs because I know that is something that is becoming so much popular now. BLOK is considered a thematic ETF. How should long-term investors think about thematic ETFs, and what type of investors are thematic ETFs for?
Yeah, so thematic ETFs are really ETFs that aren't really pigeonholed oftentimes by a sector, and they actually invest like across sectors to really kind of fully harvest the opportunity in a theme. Right. So, if you just look at like our block ETF or blockchain, there's technically financial companies in there. Those would be like exchanges, crypto exchanges. There's traditional technology companies in there. There's semiconductor companies that create mining equipment. There's other companies that are kind of broad-based technology oriented. There's even, and some people will get the joke there, a hotel company in there, Metaplanet. So there's a variety of different, opportunities across sectors, and that's what themes do. Sectors are kind of an old, rigid way of looking at the world. Now, with kind of technology disrupting almost every sector, you have to really, we think, look across sectors. So when you're looking at a thematic growth opportunity, I mean, I think the big separation is some of these are more core, longer duration themes, and then some of them are maybe a little bit more tactical and short nature. So the longer duration themes are, a theme like cybersecurity or blockchain and crypto or AI. These are things that are going to play out over the next 5, 10, 15 years. And they're probably core holdings that you'd have that would complement a broad-based, let's say, technology allocation that probably isn't overweight in crypto, blockchain, cybersecurity, or AI companies. It could be a little bit on the AI company because of the Mag 7, but we know there's many other types of AI companies besides hyperscalers and NVIDIA. So that would be one example of a long-term trend. Another would be cybersecurity, and the rise of AI and the digitization of payments in our life. The more security we need from all these different threats, and cybersecurity is something that's only going to be more and more crucial. It's going to be more like a utility for individuals, companies, and governments over the next 5, 10, 15 years to protect those assets. Now, on the other side, there's more short-term or tactical thematics that you can look at. Like one we have right now is our junior silver ETF. Silver is in a supply deficit over the last 5 years. It's one of the most electrically conductive materials. So it's found in solar panels, batteries, in all of our devices, but it also is like a store of value, maybe not as store of value oriented as gold, but certainly about half its demand is store of value and the other half is industrial. Well, there's some supply imbalances right now in silver, and silver has had some really nice price appreciation. 1 or 2 years from now, could there be more silver supply and maybe the capital appreciation potential is leveled out for a time period? That's true. So that's more of a tactical thematic to look at. So I think when you're looking at thematic growth ETFs, you first have to say, is this a core theme that I think is going to be around for 5, 10, 15 years? If so, then I think you can set it and forget it, if you will. You still need to rebalance relative to your regular portfolio and make sure it fits your risk tolerance. But certainly these themes can often be real nice complements to your large core portfolio by kind of overemphasizing these growth areas, these innovators, these new technologies, new methodologies in the marketplace. And then secondly, if it's not core, it's tactical, well, then tactical, you need to pay attention kind of on the dynamics of how it's trading. There are times to buy tactical thematic ETFs, and certainly there are times to sell. And the danger with thematic ETFs is the time to sell is always after it's had such a great run. And you realize that, the price of silver has gone up, two or threefold or something like that, or had just exceptional returns. And that's when it's hardest to sell psychologically, but that's when the best kind of returns are to rebalance out of that and add to maybe some of your other portfolio that is maybe at cyclical lows. So thematics again, are something that you really have to approach carefully and determine kind of what the time horizon is for the thematic and then act accordingly.
Yeah, I think when it comes to thematic ETFs, they're always fun to buy, trade, sell because I remember a few years ago they had the inverse Kramer ETF, and I think that was a really fun ETF because it shot up, I think, 80% in a year because of all the mistakes Kramer was saying on television. But yeah, I'm highly looking forward to future thematic ETFs because I love thematics. A lot of my audience members love the thematics as well because it's just kind of fun, right? It's kind of like I want to I want to invest in tourism, but I'm not going to invest in one company. I'm going to invest in anything that has to do with tourism, and I think those are the best returns. So when you are creating these thematic ETFs, how do you assess which companies truly are a blockchain or AI or crypto company? Because it's the buzzword these days. Everybody's saying AI this, blockchain this, but then when you actually look deeper, they might have barely any AI use. So how do you judge a company or how do you know if they're actually in that sector?
Yeah, a lot of times we're looking at the underlying company fundamentals, and that could be looking at their percentage of revenue from that actual, let's say, AI business or from blockchain. Generally, that's going to have to at least be 50% or more, because there are many conglomerates that are making big contributions to disruptive areas. Alphabet or Google is one of them, where they have a unit, maybe like self-driving cars like Waymo, that's a market leader. But should you invest in Alphabet stock or not in an EV or self-driving car portfolio? Well, I think you have to look at either a revenue test to see, again, is it more than half of their revenue? Or second, you can also look at market share. So maybe it's not entirely their majority of their revenue, but what if they have a top 3 or top 5% market share, or top 5 market share percentage in their industry? That is another, I think, test to, especially when you look at conglomerates, to see, will that move the stock? Because that's I think what the challenge of thematics, especially when you're doing cutting edge, more early, future forward looking thematics, is there enough purity out there to own a basket of securities so that they move in the right direction when news breaks on the sector? And I think that's ultimately the litmus test. And I've been doing this. I think our first thematic ETF launched in 2006. When I first kind of started in the ETF industry at another sponsor, and we've learned a variety of different lessons in doing this, because there's times where you want to do a market segment and there's clearly some pure play companies in there, but you may not have enough to fully diversify. So then maybe you expand to, well, we have the pure play companies. What about the suppliers of the pure play companies? Their business is dependent on the theme or the kind of market leaders that are pure play. Are those good to include? And I'll tell you that sometimes they are, sometimes they're not. The great news is, back in those days, that's the dilemma we were looking at in the early 2000s. Today, there's been a lot more developments in the ETF structure where you can see a Mag 7 ETF. And yeah, it doesn't maybe own the actual stocks, it owns swaps or derivative contracts on the stocks, but it gives you exposure to those companies. If you were doing it 20 years ago, you would own the Mag 7 stocks and then a variety of other stocks that were part of their ecosystem, and you wouldn't see as pure play exposure when it comes to price returns. So that's what the ETF industry is always striving for, I think, is to deliver that pure play. The challenge is sometimes you deliver the pure play and people maybe are a little bit, unless they look under the hood of the ETF, they might be surprised on how the pure play exposure is delivered. So again, like doing a Mag 7 product, you couldn't just own the stocks, you have to own swaps. And some people would say, hey, I don't ever want to own an ETF that's all swaps. I want to have the underlying stocks held there. So does it matter in the return perspective? Probably not. probably swaps and in individual stocks, generate the same return there. But it's something important to look at when you're considering thematic ETFs. Not only kind of do they look like a pure play, but then actually reviewing their holdings and their selection criteria to make sure it matches your investment risk level and your understanding of the portfolio.
That is actually a very, very good point because I interviewed another CEO a few months ago, and he was telling me that even if an ETF has a great yield, just you can also dig deeper and find out where the yield is actually coming from. It may not be a pure distribution or dividend play. It could actually be doing this and doing this and doing this, and then the distribution comes around. So I'm guessing with thematics, it's the same thing. You know, at first you might jump in thinking it's a pure play, but then when you go under the hood, you might see, oh, so you're not investing in Amazon, you're actually investing in other pieces that will expose you to Amazon. So, audience members, as I always say, always do your due diligence. Always look at the ETFs that you're investing in. As Christian said, the returns may not change, but for some of you who are a little picky, you know, you may not be investing in the actual company. So, Christian, what are the biggest risks investors should be aware of when investing in AI, blockchain, ETFs? Like, for example, I know currently we have the US and China tensions. One day they're best friends, one day they're enemies. And this innovation has affected, especially, you know, the chip sector, the EV sector. So, what should investors be aware of, even though we're going through some geopolitics currently?
Yeah, I think it's, for most investors looking at those areas, those are dynamic growth areas. So they definitely offer the potential for well above average returns versus just the standard market. The price you're going to pay there is they're going to have probably above average volatility, meaning they're going to have some ups, but they're going to have some downs. And as people like to say, well, I just buy the dip. But as investor psychology doesn't always work that well when you're in the midst of a dip and you don't know how long it can last. So I think one big risk is buying something that maybe you believe in, that you're excited about, but maybe you can't handle from a financial standpoint or an investment standpoint when the dip happens. And maybe you believe in it, it's going to work long term, but you can't see your account or your fund holding down 20 or 30 or 40%, even though that hopefully is temporary over time. And believe, as we see NASDAQ 100, which is full of those companies at all-time highs, it's never had a dip so far that it hasn't recovered from, we're at all-time highs. And this, as the saying goes in equity markets, temporary declines, permanent advance. So I think we know that from a head knowledge perspective, but as you know from your your gut, your soul, when things are down, it can force you to sell and take action to realize those losses. You don't realize those losses until you sell and take action. If you just hold and go through that dip in the NASDAQ 100 or even the S&P 500, you're going to come out the other side. Now, recently we haven't had many long-term dips, so many people would say, well, sure, I can hold for a month or 2 months, but I think you have to ask yourself with some of these areas, can I hold for a 6-month dip, a 9-month dip? What about a year and a half? Will I still believe in it? Will I still allow myself to have that conviction through that time period? So these are more aggressive areas, and they offer some unbelievable promise, not only to us as humans, but to investors. But just be aware that there's a lot of volatility attached to it. So I would say, determining your position size. So for example, if you have a 5% position in an ETF, it may not keep you up at night if it's down 50% because it's only 5% of your portfolio. Whereas if you say, hey, I'm going to only buy 4 ETFs and they're 25% each of my portfolio, and that 25% position is down by 50%, that's going to cause you some concern. So I do think diversification is important, and thinking about position sizing, what starts to stress you out from a drawdown perspective. The other thing I just would say is that you're right in terms of kind of the geopolitical environment, Jacob. It is very volatile right now. So, one X post one firing of a government official, one military drill in Taiwan. All these things can impact certain sectors very dramatically, whether that's semiconductors or technology or companies that have exposure to China, rare earth materials, etc. There's just a lot more risk in the marketplace. So, well, I think it's a world full of promise right now in terms of technologies and advances and new value being created that investors will realize in their stocks. I do think it's also a heightened period of volatility, and you should expect more volatility, not less. And you should therefore control your position size to make sure that fits your ability to withstand with the withdrawals or downward movements, but then also look out further in terms of your time horizon, in terms of what your expectation is for these types of unique areas. So it's the best of times, it's the worst of times. Hopefully, you have more better times than bad times, but it's an era of great choice. But I guess as Spider-Man says, with great power comes great responsibility. So we got to balance that.
Absolutely, absolutely. And this is something I always mention on my channel to always create a plan. A lot of people that I know, whether it's my audience or just people in reality, their neighbor says, buy this, and they're just jumping into it. Or, their grandma's like, oh, I just, up 2%, boom, okay, they're going to buy it without any due diligence. And I think you're right, especially when it comes to technology sector. Definitely massive rewards, but also the volatility can be insane. For those of you who've been holding Bitcoin for the past 3 years, those diamond hands for so long, it's finally paying off. So I think when it comes to the tech sector, never sell. I mean, if you need to sell, but if you're down, just hold, because it's just going to get lower. It's going to get lower. Then it might shoot up. You can't really time it. And as you said, right, one X tweet, one official getting fired can really revolutionize your own portfolio. So to stay on with, I guess, geopolitics, with everything going on in the world, right? We have propaganda, we have AI deepfakes. I know Google just came out with their VO3 video editing, which is incredible. Sometimes I get fooled. Everything's being taken over by AI when it comes to information, social media, and so on. What do you think about the future of getting information and news? Do you think we're going to have a really hard time separating what's real, what's not real? Or do you think there's going to be companies out there that's going to have some amazing technology that's going to maybe have a watermark or something that's going to let us know, hey, this is AI or this is not real? What are your thoughts on that?
I think you're right on it, Jacob, that there's going to have to be some type of third party validation. So, I think to me, the two areas that really, crop up as potential are a blockchain based, validation system for content and transactions, but also cybersecurity. Perhaps these cybersecurity platforms that try to secure us now and are using AI more and more will create some standards to allow media, governments, other content providers to kind of have a secure way of or platform or technology of making sure these deep fakes, these kind of AI creations don't kind of overrun the world and we're in a mass of confusion. So it is definitely going to be a big business opportunity. And whoever solves that, I think, has got $1 trillion market cap. And I think we'll see two groups, at least in my opinion, right now, would be the blockchain companies and the cybersecurity companies. I guess you could throw in AI there, but I think cybersecurity companies are the natural fit just due to the kind of level of security and validation they provide, and then creating some type of AI-based platform for verification. So it may be hard to go on YouTube in the future to watch another rant from you unless you have log into a cyber secure platform or put your blockchain token in that's validated, and then boom, it'll unlock it. But that also brings opportunity for you to really know your audience, maybe even connect with them more closely than on some of these media platforms. I think it creates a lot more customization, peer-to-peer content, and authenticity. So there could be some neat things that occur from that. and for creators, but also consumers. So I think, well, there's a lot of fear about it. I think it'll be a double-edged sword, that there'll be a lot more unique kind of engagements that will spring out of being able to really kind of connect directly with and validate kind of the user slash content provider experience.
I never actually thought of it that way. That's actually a very well said point because I personally believe when with regulation comes positive opportunities. Like for example, with crypto, before it was regulated, it was just speculation. But the more it's regulated, the more it's being adopted, the more people are trusting it. And I think that, you know what? I think AI and deepfakes and all of this, there will be that company that comes out. And I think the cybersecurity is very fit to do that since they're already in that complexity of, keeping us safe and keeping us aware. And so to stay on that point, are there any technologies that you think are nearing a major breakthrough? Me personally, I think the quantum chips are going to revolutionize everything. I think when it comes to even blockchain, I've heard some rumors that the quantum can break the blockchain eventually. Personally, I think it's just going to be blockchain goes up, quantum goes up. It's just going to be a race of that. But what are your thoughts on any upcoming breaking technologies?
Yeah, I think quantum computing is definitely promising. And, when you read some of the potential of what a quantum computer could do relative to what we have today, it's really mind-boggling. And I know, there are efforts underway to create, cryptology that's quantum computing proof. So, crypto is based off cryptology. It is secure. If you've seen the fun meme where it shows, it's on one side, it goes, here's your bank pin and it's 4 digits. And then here's your Bitcoin's pin and it's like, 19 rows of zeros and ones. There's a certain level of cryptology that's inherent in blockchain and certainly in Bitcoin. And as kind of the largest public blockchain, Bitcoin, has never been compromised and has been able to stay ahead. And I think that's one of the reasons it has a bit of its store of value status and leads in market capitalization. But clearly there's a lot of economic incentive for now governments, corporations, and individuals to ensure that that decentralized network that Bitcoin is built on, that blockchain, is secure against quantum computing, because China is making some amazing advances in their data AI infrastructure, their ability to cool their machines. I know quantum computing, one of the big challenges is the heat involved there. And, China's now putting, data centers under the sea to be cooled. So there's a lot at stake here. Really, I believe it's a national security issue. So I think, one big area that I think, believe it or not, is I think under the radar as well, is kind of the electricity producing problem that we have kind of globally. The US, just based off data center demand and current demand, is going to need to double or triple its electricity production in the next several years. And that's just to start to catch up to China. China is already, I think, 3x the production of electricity, and it costs, I think, a third of what it does for the US per megawatt. So why is that an issue? Well, if AI becomes kind of the new weapon, the new superpower, the new advantage from a geopolitical standpoint, what fuels that is power. And if you don't have abundant electricity and cheap electricity, you've got an issue. And here in the U.S., we've had rolling blackouts over the last couple of years in places like California or Texas. And that was before we really saw kind of these investments that are happening in AI. So I think there's a really interesting kind of investment opportunity, potentially breakthrough technology opportunity in some of these alternative power generation systems. We're seeing, like in Japan, these mini nuclear reactors start to roll out, which sounds a little scary, but I think that's where it's going. China has a variety of small nuclear, plants. The U.S. is looking at larger scale. Solar is evolving very quickly, with China leading there, and is a great source of really cheap energy now. Also, we got to really open up, I think, some of the, speaking of Canada, the natural gas that is abundant in North America, and that obviously has some concerns potentially environmentally, but from a cost perspective is going to be something that in terms of cost and time to market might be easier than things like nuclear, et cetera. Who knows? We may even see another type of, could we see something like cold fusion or some other energy technology be introduced that really solves this problem? Because I really believe it's like a Manhattan-like priority for the national security of many of these countries to ensure that they have kind of the most robust AI program, and that includes power generation, not just chips, not just rare earth metals, not just some of these other key ingredients, including the brains that are creating that. So that supply chain is going to be big, but it'll be, I think, we'll see more themes emerge. Everyone says, have we seen all the themes that are going to be? And it's like, I heard that 10 years ago and I hear it still today. There's going to be new themes and new areas to capitalize on, and that's what makes this business exciting. You get to talk about all these new breakthroughs and kind of the geniuses behind them with Elon Musk and others. And space is another one that I think maybe part of this solution here, including potentially beaming power from satellites that capture solar energy directly down to Earth, which China is looking at. So there's some crazy things there that sound like movie scripts, Jacob, but they're apparently being worked on.
And it's something that we have to do because honestly, the electric grid is I would say the number one resource that we need, whether it's for blockchain, the simple internet, or even EV cars. I know a lot of states, even here in Canada, we have a 2035 mandate where no more gas guzzling cars are going to be sold. Well, we don't have the infrastructure for the electricity grid. So if you're going to mandate something, at least have the infrastructure for it. And I know in many states in the United States that Tesla chargers are not enough because there's so many EV type of cars, but there's not enough chargers.
Yeah.
And I think when it comes to the future, we have to start figuring out, are we going to have a little nuclear reactor in everybody's backyard? Are we going to have, cold fusion or maybe some new alien type of technology that we've never seen before? But you're absolutely correct. In the future or even currently now, we are in an electricity problem
Yeah.
and we need to step it up because if we're trying to advance tech, we got to have the infrastructure to help us advance it. So thank you for that point. So Christian, on this channel, we do have a small segment where we just talk, ask out of the box fun questions.
Yeah.
And then we'll get back to the serious ones. But are you up for it?
That sounds great. I love it.
All right, perfect. So, Christian, if Amplify was a person, what kind of personality would it have?
Well, I think it would be curious. It would be a personality that likes to learn, but then also likes to teach. So not just learning for learning's sake, but then delivering the application of that learning to help others.
I love that. And what is the most random app that you have previously downloaded or currently downloaded? Just some random app. I know some people say they have a yoga app, some people have a sunset app.
Yeah. I got a kind of a good one that I just did recently called Suno, and it's a AI app that allows you to create a song based off text inputs
Oh,
in almost any style, and it's great. So I just created a song about my daughter's volleyball team, as a matter of fact, on a personal note,
that is
but
awesome.
used
That's
it to
actually so
actually
unique.
see. Yeah, yeah, it's great. It's on my phone, and it's. I will warn you, it's a little bit addictive, which usually that's probably a good recommendation when somebody says something like that.
No, that is definitely, I'll definitely check that out. I never heard of it that. Okay, and the last question. If you were not in, blockchain, crypto, investments, finance, what totally unrelated career would you be in?
Boy, I think I would be like maybe a journalist. I
Nice.
think I enjoy kind of a variety of topics and following kind of the story and kind of what's going on in those topics. And then, I think it's rewarding being able to kind of summarize and share some of those insights to people who, receive value from them. So I know journalist is kind of like at least in the US here, it's kind of like there's not a lot of trust right now in traditional media. So it may not be the best answer. But again, I think the spirit of being a journalist, sounds interesting to me. And I definitely, love kind of connecting with people who are experts in areas that are dedicating themselves to what's going on and then kind of hearing their insights. So I'd throw out journalist as a potential.
That is actually so cool. Yeah, and you're absolutely right. Even here in Canada, our news, the mistrust is there. So many things that they fabricated, so many things that they swept under the rug. So the trust isn't there. But journalism, in my personal opinion, I would love to be a journalist too. It's kind of like, the Hardy Boys. You're solving mysteries, talking to people.
That's right.
Um, so of course, the past few years we've had some transformation when it came from physical brick and mortar businesses into the digital world. And a lot of businesses that did not convert to digital unfortunately failed. What should companies and entrepreneurs do to keep up with a digital paced world? Should they just continue learning? Should they take more risks? What do you think?
Yeah, I think you definitely have to continue to learn. I think when you stop growing, that's a bad sign. You always have to have, I think, as a company or an individual, that outlook on feeling like you're moving towards a better future. Now, a better future can mean a lot of things. Maybe it's more convenient in terms of running your business, or maybe as an individual, it's a better relationship with key people that are important to you. Or maybe it's as an investor, feeling like you're growing your portfolio or in growing your investment expertise over time. So, in the case that you mentioned, we are moving to a more digital economy. So, I think you have to push yourself if you're a legacy business to figure out how can I incorporate AI, for example, into my business. And sometimes that's hard to think of when you're a traditional person in a business that hasn't ever used AI. But I think there's a lot of great resources out there of businesses in your market segment or those that are kind of similar to your market segment that you can find information on. There's tons of great, content on YouTube. There's a lot of great websites that specialize on AI applications. And even if you're not learning how other businesses are incorporating it, or you're having a hard time translating that to your business, you can also look at just some of the top kind of AI apps that are out there and look at use cases. So, whether that's, helping you create some content, or, finding out more background of somebody you're going to meet with or interview. There's a variety of things that you can do to, start you down that path. And I would just say that I've always found that it's been a bit of something that increases in terms of momentum. You have a little victory on using AI or using a new program or software, and you take another step and find another way to use that, and it builds. And suddenly, you're 6 months or a year into it, and you're like, I can't believe I didn't use this program before, or can't believe what life was like when I had to do this all by myself. So I really encourage people to, look towards a bigger future and take the steps, even though they may be painful, or maybe you might be embarrassed, or maybe it'd be hard to motivate yourself. Invest in yourself, invest in your business, because I do know that, that action that creates something in you and in your business that will come out in terms of momentum, and I think will lead you towards that bigger future. And that instills confidence in you as a person, as a business owner. And that's so important, is to really maintain that confidence when you're out making it happen for not only your business, but you as a business, you as somebody who's growing in your relationships, in your life, in your investments, in your career.
That is absolutely amazing advice for not only the beginning investor or entrepreneur, or even if you're a seasoned professional, because this type of advice is what many people need to hear. Sometimes people are complacent. They get to a certain level in their life, and they're like, okay, I'm happy. When really, if you just continue pushing yourself 6 months to a year down the road, you're like, wow, look at how much I've grown. So if you're an investor that is beginning or even professional, make sure you're always growing, you're always pushing yourself forward. So Christian, before we end this interview, what are your plans for the future of Amplify for maybe the next 3 to 5 years? I know you said that you have an Ethereum ETF coming out 6 months, 5 months.
Yeah, so kind of future plans. In the US, when you file for an ETF, you generally wait about 75 days for that filing to actually go effective, which then allows you to generally launch the ETF. So we filed for 2 Ethereum ETFs on late last week. So we're about 73 or 4 days away from hopefully launching those. So that would be, I think, roughly October, given the time we're recording right now. And then today, we just filed for a Solana ETF as well on the income side. So another kind of covered call product, but on a layer 2 product like Solana. We're going to continue to expand some of our themes as well as some of our other non-crypto income ETFs through the end of the year. We may actually acquire another fund or two that's out there that we're interested in, or maybe even partner with another fund company and adopt some of their ETFs into the Amplify ETF platform. So, we started the year, Jacob, at 9.9 billion in assets under management, and we're nearing 13 billion. We've had a good year. We've kind of doubled the ETF industry growth. The ETF industry is up about 11% here in the US this year. We're up just over around 23% year to date. So we've had some solid growth. Partly that's due to capital appreciation and good markets. Partly that's more people have bought our funds. So we're grateful, and we just want to continue to grow and serve investors. And my vision 3 to 5 years from now is we go to 2, 3, 4 times really the size of our ETF business. Some of that's through new products and partnerships. Some of it's just from our existing funds having continued momentum, and also being able to do some business in Asia, as well as we have some funds that we work with Samsung Asset Management, the largest ETF provider in Korea, and their Codex ETF lineup. So we have a strategic partnership with them, which has been a neat experience, and certainly enjoyed traveling to Seoul. So we're looking forward to that bigger future that I mentioned, and really kind of looking and measuring ourselves based off our past and seeing kind of the gains we're making, and letting that be an encouragement, and not allowing ourselves to look at the largest ETF issuer in the world and feel so small and tiny, and instead say, hey, you know what, we're making gains in our business, in our lives. We're making gains for investors, and we're going to try to continue to stack that over time, and that'll lead us to a good outcome.
I think that is an absolutely beautiful vision. I think that is the right track that every company should be doing, starting off with some key flagships and then continue expanding, continue trying new things. And I am highly looking forward to the Ethereum and Solana ETF, especially the Solana one, because personally, I haven't seen any Solana ETFs, and I'm sure maybe down the line an XRP ETF. I know that's been hot these days as well. But when those ETFs come out, we would love to have you back on this channel and tell us a lot more about it. And year to date, your growth has been incredible. So, Christian, today has been amazing. You have given us so much wisdom, knowledge, and expertise in crypto, blockchain, AI, and ETFs, of course. And so, when those ETFs come out, you'll be the first person I contact to have you back on. Audience, please make sure you check out the description, because I will have all of Amplify and Christian's information in the description box below. And if you have any questions, you can ask me. I'm sure Christian will be open to getting questions from you as well. Christian, any last mentions, anything you want to say to the digital world?
Hey, Jacob, it's been my pleasure being on your rants. You've got a great show. Love your energy. Thanks for your encouragement. I appreciate your spirit and how you talked to me and had a conversation with me. That was awesome. Look forward to seeing you again, my friend.
Definitely. Thank you, Christian. As I said, I'm so honored for you to be here with me today. So audience members, my awesome people, please like, subscribe, and I'm always bringing you some awesome interviews with some amazing people. So please make sure you check them out. Until the next time, stay ranting.